let me be honest with you. Most people who enter trading in 2026 are not failing because trading is difficult. They're failing because they're starting without a clear plan. And I've seen this again and again. People open an app, watch a few videos, take random trades, and then wonder why their money disappears. So in this video, I'm going to walk you through a structured 7-step roadmap. The same framework I'd give someone if they were starting from scratch today. No shortcuts, no hype, just a practical way to approach trading like a professional. And if you follow this properly, you'll avoid the mistakes that wipe out most beginners. Before you do anything, you need clarity. And here's where most people get it wrong. Trading is not investing. If you're holding something for years, that's investing. If you're entering and exiting based on price movement, that's trading. So when you step into trading, your mindset has to shift. You're not buying a good company. You're trading price behavior. Now, yes, there are different styles: day trading, swing trading, scalping, and position trading. But if you're starting out, I'll tell you straight, start with swing trading. It gives you time to think. It reduces pressure and it helps you actually learn the market instead of reacting to it. Now, when beginners open charts, everything looks random, but it's not random. Markets move because of one thing: imbalance between buyers and sellers. If buyers are stronger, price moves up. If sellers are stronger, then price moves down. Simple. But to read that properly, you need to train your eye. First, understand trend. Before any trade, I always ask, what is the market doing overall? Uptrend, higher highs, higher lows. Downtrend, lower highs, lower lows. Sideways, no clear direction. If you ignore this, you'll keep taking trades against the market. And that's one of the fastest ways to lose money. Second, supply and demand. Price reacts at certain levels for a reason, because that's where big money entered before. So instead of guessing, focus on where strong buying or selling happened earlier. That's where opportunities repeat. Third, who moves the market? Let's be very clear. Retail traders don't move markets. Institutions do move the market, like banks, funds, and algorithms. So your job is not to fight them. Your job is to align with them. Now, here's a mistake I want you to avoid. Don't try to trade everything. I've seen people jump from stocks to crypto to Forex and end up confused in all three. Pick one. If you're starting, stocks are structured and beginner friendly. Indices have cleaner trends, and crypto has high volatility and higher risk. If you're in India, I would strongly suggest start with stocks or indices and stay there long enough to actually understand how they move. Because in trading, depth is more important than variety. You don't need a complicated setup. In fact, most beginners overcomplicate this. You need three things. One, a reliable broker. Execution matters, cost matter, regulation matters. Two, a clean chart, candlestick charts. Keep it simple, because price itself gives you most of the information you need. Three, basic indicators you can use, moving averages and RSI, but don't depend on them blindly. Indicators are tools, not decision makers. Now, this is where most people go wrong. They either keep changing strategies or copy someone else without understanding. Neither works. So let's simplify this properly. Every strategy should answer three things. One, when do you enter? For example, if the market is in an uptrend and price pulls back to support, I look to buy. Two, when do you take profit? You define this in advance. Example, if I risk 100 rupees, I aim to make 200 rupees. Three, when do you exit if you're wrong? This is your stop loss. And let me be very clear here. If you're not using a stop loss, you're not trading, you're gambling. Now combine everything, trend to pullback to entry to stop loss to target. That's a complete system. And honestly, simple systems work best. If you ignore this step, nothing else will save you. Because I've seen traders with great strategies still lose everything. Why? Because they didn't manage risk. Rule 1. Risk small. Never risk more than 1 to 2% per trade. If your capital is 10,000 rupees, your risk per trade should be 100 to 200 rupees. That's how you survive long enough to improve. Rule 2, always use a stop loss. No exceptions. Rule 3, think in probabilities. You will lose trades, even professionals do. What matters is your winners are bigger than your losers. Rule 4, avoid overtrading. More trades doesn't mean more profits. Sometimes the best decision is to stay out. Now, this is where trading becomes real, because at this point, it's not about charts anymore. It's about you. You will experience fear when entering, greed when in profit, and frustration after losses. And if you react emotionally, you break your system. So, what actually works? Following your rules consistently, accepting losses as part of the process, staying patient even when nothing is happening. One habit I strongly recommend: journaling after every trade review. Why did I enter? Did I follow my rules? What can I improve? This is how you grow as a trader. And one more thing, be very careful with social media. You'll see profits everywhere, but you won't see the losses, the mistakes, the years of practice. So stay focused on your own process. Let's quickly bring this together. If you're starting trading in 2026, understand what trading really is. Learn how markets move. Focus on one market. Keep your setup simple, build a clear strategy, protect your capital, and stay disciplined. If you follow this properly, you won't just start trading, you'll start trading the right way. And remember this, trading is not a shortcut to money, it's a skill. And like any skill, it rewards consistency over time. If this helped you understand trading more clearly, subscribe for more content like this. And in the next video, I'll walk you through a complete beginner trading setup on live charts. Until then, stay disciplined, manage your risk, and trade like a professional.